For the first half of the year, and this is the case I'd made if anybody's sitting at the Fed table, for the first half of the year, core GDP was up only 0.9% at an annual rate. So it's softer. I would say to you the economy is a bit weak.
You heard it here earlier in the week. Keep an eye on the jobs market. And according to new data today, that was pretty good advice. The July labor report revealing America added just 73,000 jobs last month, lower than expected. And take a look at these revisions from June and May. Over 250,000 less than originally reported. President taking a Truth Social saying the Federal Reserve better wake up. Powell is a disaster. Drop the rate. That's probably the nicest thing he said about Powell today. Okay, Gary, we don't have any tequila on set for you, so no drinks, but you're going to have to opine on what's going on here with the jobs picture and the Fed and how it all rolls together.
Well, the president's 100% right, and here's the stunning part. On Wednesday, Jay Powell had these numbers. These revisions are happening. My little sampling of the economy, it is slowing. I have a nice little radio show where I ask people to email me on what's happening in their businesses and in their cities, and there's a slowdown going on. For the life of me, why he's not a half point lower right now and why he didn't cut this week, I just don't get it. And I know people saying it's political. I just think, I don't think he really knows what he's doing. They have, like, I think 200 analysts. I'm just one person. I see it. They have 200 analysts. I just
I think
don't
they might even have twice that, but who cares?
Right. The president's 100% right. No, he shouldn't be 1%. That'll import inflation again if you go too far. But definitely be a half point lower, 3/4 point lower, and it will not kill anything. It will not destroy the world. It will not create massive inflation. I just don't get it.
You know, Jackie, when you think about what he and others at the Fed know going into those meetings, and particularly when you look at this jobs data, and I mean, it's dang soft. Larry was right.
Yeah.
It is hard to explain. Frankly, everyone is complaining about no cut in July. But if you look at this stuff, you're thinking, well, why were these guys so off base? I mean, what about June? Maybe they should have been doing it in June. So too late might not even go far enough at this point.
It might not, but he's got a problem, Jerome Powell, generally with lateness. And it's really about doing your job. It's not about who is commander-in-chief. We were talking about him being too late when it came to 9% inflation under Joe Biden and what his intent was there. I think his intent was to try to help Joe Biden, which is why he said it was transitory, didn't act. He realized, and so did Janet Yellen, that they made a big, big, big blunder that hurt the American people. And so to go and now be too late again because you're trying to go after Trump or because you feel like if you cut at this meeting, it would look like he was pressuring you. It's not about the pressure. It's not about his Truth Social posts. It's about the data. And so you bring up the jobs numbers. Yep. Larry was talking in that soundbite about the GDP. There is a potential concern about tariffs here. To Gary's point, if he had dropped rates, say 75 basis points, 25, 25, 25, and sprinkled it in, he always has the opportunity. Nobody is going to jump on you if you got it wrong or new data materializes and all of a sudden you need to raise again. But just sitting back and being idle is really just being ineffective. It's being political, and it's not doing your job. And that's the biggest problem that I have with this. We can talk about Fed independence. We could talk about the markers that they should be looking at and that things should change. But be independent. Look at the data. There were 2 dissenters that felt really strongly in that last decision saying he's not doing the right thing. Taylor always rightly brings up it's not only his vote that matters. He doesn't make the final decision. They all do. You had 2 people there saying you should be cutting now.
The rest would have fell in line if he was for the cuts. I will promise.
Well, and those 2 are Michelle Bowman and Christopher Waller, and they actually published their reasoning for that this morning before we got the jobs number. And Madison, what they basically say is the tariff price hike, to the extent we see it, will be a one-time thing. You should look through to the underlying economic data, particularly jobs, and they have not liked what they've seen on the jobs front, which is why they're rate cutters. Apparently that was not persuasive to anybody but the 2 of them at the Fed.
Right, I know. And now we're seeing these revised job numbers, and it seems like there's a bit of consensus, at least at this desk, that should be a sign that this is a weakening, a soft economy, and something needs to be done. And then I know, from my perspective, I spend most of my days out on the streets, talking to businesses, talking to people, and I cover AI. So you have the tariff story, and you also have the AI story. So all these companies are investing a ton of money in AI, but AI is already starting to disrupt the workforce. You're starting to see either loss of jobs or companies not hiring, which I think is in part because of uncertainty around tariffs, but I also think it's in part because they're putting their expenditures towards those investments and they don't know how AI is going to change their workforce, what workers they're going to need, and where they want to put more money. So all of this is happening. You go out and you talk to people and you hear it. It's confusing to me how these Fed governors are not also taking that data and making the decision. Seeing this revision today, knowing that they didn't cut rates, it's surprising. I don't know what else to say.
Now, Natalie, I know you're no fan of the Fed. That's why you love crypto, because you hate all of the shenanigans around this. You hate the decisions they make. You hate the control they have in the economy. But just stepping back, we have a Fed for now, right? We have these jobs numbers, and you do need them when they have their hands on the levers of control. You need them to do a good job. From your standpoint, have they blown it? And, there's some people out there saying, they've blown it so badly, they shouldn't wait until September to meet again. I don't know. Do you think that's a good idea?
Well, you should see what the Bitcoiners tweet about the Fed. I think that this.
You might have to sanitize that a little bit for us, okay?
I think this jobs report does lend support to what Trump is requesting of the Fed, but I also think that this moment really does show us how much power we've concentrated in the hands of a few unelected officials at the Fed.
Bingo.
This system it's political, it's centralized, it's ultimately fragile. I don't think interest rates should be decided in back rooms and in press conferences. They should be set by a truly free market, and that's why I think ultimately this is all a massive billboard for Bitcoin, because you have a monetary policy that is fixed, that is transparent, and it's enforced by code, not by politics.
Can I just tell you?
You seem like you want to weigh in.
I agree 1,000% on that. It has to be watched right now. The transport stocks are rolling over, falling off a ledge this week. That's number one. Those are the movers of everything. The restaurant stocks are starting to get hit. Chipotle just got whacked to the downside.
Oh, Brian.
You don't have to tell me, Gary. We know that.
Starbucks, where a new CEO, I don't think he knows, is getting it right. The restaurants are getting hit. Watch the retail stocks. If all these consumer areas start to get hit, it's going to tell you something about the consumer. If the consumer gets in trouble, watch GDP go negative. And then Jay Powell, 3 months later, we better lower rates now.
Right.
Yeah.
Good impression.
Yes.